Remember all these, this was the parallel that gave me the upside target of 80 to 83, 85,000 right here. All right. That now becomes resistance. So this would be your best case scenario for me. I'll move back to about 75,000. I don't know if it gets there. Again, that's when I say best case, it means the odds aren't like tremendously in that favor. It's not like 75% chance that it's going back there. It's probably more of like a 50-50 or so, but it's just like, if we really get this bull move in crypto, like a great move, that would be where it's going to run into issues. Just like in the last move up where I called the top right here, that was the best case scenario. It actually played out. It was also, don't forget, the reason why I had that level, it was right in, see this low right here? That low right through there too. See, this low pivot of this drop went right in there. I mean, this stuff is so cool. Like when you, I mean, you guys see how giddy I get. I get giddy like a kid in a candy store, right? But in any case, good move up here on Bitcoin. I've given you your levels. What would be a failure of this? So if we do start to crash back down, generally you want to hold this this high pivot, this 64,200 level. If that breaks, you can either take a stop out for a really tiny loss, or you can look for the double bottom break. I mean, really now, as long as we trade inside of here, you know.
Could Bitcoin's latest rebound be the start of a larger advance? Or is the market simply repeating a pattern that has marked major turning points before? According to Gareth Soloway, Bitcoin's rally from roughly $63,500 on Friday to nearly $66,000 may be more than just a short-term bounce. At the center of his analysis is a classic double bottom formation, a pattern that often appears near important market lows. But there's an important detail many traders miss. In a typical double bottom, the second test of support frequently dips below the first low before reversing higher. Soloway argues that this is often driven by institutional traders targeting stop-loss orders sitting beneath key support levels. Those stops trigger additional selling, flush out weaker hands, and can create the conditions for reversal. For Soloway, trading is not about certainty, it's about probability. Rather than chasing setups with unclear outcomes, he focuses on patterns that historically offer a 70 to 75% probability of success. He points to a similar setup earlier in Bitcoin's cycle, when the cryptocurrency rallied from the mid-$60,000 range toward $83,000 to $85,000. In his view, these patterns carry more weight when they develop after extended declines and form at clearly defined pivot lows rather than in the middle of a trading range. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying close attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
So Bitcoin's had a beautiful move over the weekend into Monday. You can see coming in on Friday, we basically had a flat day. We hadn't broken out yet. All right. We were trading around 63,500. We're now basically just about 66,000. All right. So let's talk about this. Here we have the double bottom, the classic double bottom on Bitcoin. One of the things to always remember, guys, is when double bottoms occur, usually the second hit of that line, so here's the start of the line, here's the horizontal line, it almost always pierces. Now, the methodology behind the pierce, and you can see it right here, is that you have stops that people put right there. The institutional money is always going to want to run those stops. So they're going to pierce it, which triggers the stops, which triggers additional selling, right? That's what causes this tail down below it. And then once those weak hands are flushed out, then you get the recovery. And as long as you get a daily close back above, this is considered a double bottom. And it was, right? So that's step number one. We had a double bottom. So we knew we would get some sort of bounce there, right? And we, 2 weeks ago when we hit this double bottom, I discussed, okay, now we're going to look to see what pattern forms off of this. Remember, price, pattern, and time. And remember, these videos from Verified Investing, it's always all charts and data, no BS. I'm just going to give it to you straight. Sometimes I'm right, sometimes I'm wrong, but the point is it's all probability based. So I look at things that are like 70, 75% probability that they're going to do this. And that's what I talk about in these videos. I wouldn't do a video if it's a 50-50. We can go to the casino and just gamble and have fun with our buddies, right? If it's 50-50 odds or worse for us. All right, so back to the charts. Now, what was I discussing in the last video that I put out just days ago? We were watching how you had a green candle here and you had 1, 2, 3 red bars, but notice that no red bar of those three closed underneath the green, okay? So basically, this was the green zone. And you had the 1, 2, 3. And again, while you touched the low and you pierced the low of the green, it always saw buyers stepping up and keeping the daily close back above the green. That's what we call an inside bar pattern. And when it occurs at the low of the chart, it usually is signaling there's a propensity for further upside. You can see that very clearly over here. Here we had a reversal green, right? In fact, let me bring over here and zoom in so we can see it even closer, right? So same thing occurred over here, which allowed me to go bullish when we were right here on Bitcoin around 64, 65,000 for that run up to 83 to 85,000, right? That was where my target was. And the idea here again is you have a green reversal candle. It reverses 75% of this red here off of a low pivot. So it has to be a low pivot. It can't just be an arbitrary kind of inside one like here, right? Where it's really not like you go back and you were lower right over here. Like that's not going to fly. This was a multi. I mean, you go back, look at how far you have to go back from this one, right? Okay, so that's important to note. And then again, as you came back in, look, all of these reds, these downward moves, even here, this close was still inside of that green. Yes, you wicked down or you tailed down here and pierced, but you never closed below.
Is Bitcoin setting up for another move higher, or are the next resistance levels about to slow the rally? According to Gareth Soloway, Bitcoin's recent rebound has strengthened the technical picture, but several key price levels could determine what happens next. The first level to watch is $66,000. Soloway points out that this area lines up with previous lows and past price reactions, making it an important resistance zone. Markets often remember these levels, and how Bitcoin behaves here could provide clues about the next move. If Bitcoin can break decisively above $66,000, the next upside target comes into focus near $70,000. Beyond that, Soloway highlights a larger parallel trend structure that previously helped identify Bitcoin's advance toward the $80,000 to $85,000 range. That same trend line has now shifted from support to resistance, creating what he sees as a best-case target near $75,000. But he cautions against treating that level as a certainty. In his view, a move to $75,000 carries more balanced odds than high conviction. In other words, it's possible but far from guaranteed. If crypto enters a stronger bullish phase, however, that area could become the next major test for momentum. On the downside, Soloway identifies $64,200 as a critical support level. Holding above that pivot would help preserve Bitcoin's improving technical structure. A break below it, on the other hand, could weaken the bullish case and force traders to reassess the market's direction. Let's get back to the video.
Now listen, how high can we go? So the first things first, we do have resistance on Bitcoin. There's a minor level right through here. Take a look at this 66,000 level right here. All right, and you can even extend it right into here, right? Actually, holy cow, you can even extend it further back, right, to these lows right in here. So that's pretty cool. If we can get through 66,000, you actually have upside potentially to, I would say, the 70,000 level. But the best case scenario, remember that parallel I had in on the charts, guys? The parallel here, if we take this trend line and we drag it up through these lows here, and then we stretch it up to these highs. Remember all these, this was the parallel that gave me the upside target of 80 to 83, 85,000 right here. All right, that now becomes resistance. So this would be your best case scenario for me, a move back to about 75,000. I don't know if it gets there. Again, that's when I say best case, it means the odds aren't like tremendously in that favor. It's not like 75% chance that it's going back there. It's probably more of like a 50-50 or so, but it's just like, if we really get this bull move in crypto, like a great move, that would be where it's going to run into issues. Just like in the last move up where I called the top right here, that was the best case scenario. It actually played out. It was also, don't forget, the reason why I had that level, it was right in, see this low right here? That low right through there too. See, this low pivot of this drop went right in there. I mean, this stuff is so cool. Like when you, I mean, you guys see how giddy I get. I get giddy like a kid in a candy store, right? But in any case, good move up here on Bitcoin. I've given you your levels. What would be a failure of this? So if we do start to crash back down, generally you want to hold this this high pivot, this 64,200 level. If that breaks, you can either take a stop out for a really tiny loss, or you can look for the double bottom break. I mean, really now, as long as we trade inside of here, you're generally, you've now broken this. It's taken on some more bullish vibes. I continue to be bullish on crypto in general, including Bitcoin, based on what we're seeing. Now, speaking of which, take a look at ETH. ETH, guys, I remain long with members of Smart Money Crypto. That's the service at verifiedinvesting.com that I run, where I give my exact entries and exits. I actually just took half a position off, half my trade off on Aave. It wasn't a huge gain, but we had grown that position to about 10%. Again, it's a money management type thing in the services. So I try to really make sure that I have the proper allocation that I feel comfortable in on each thing. And so I like to take, when I get to like 10, 15, 20% of my portfolio in a position, when I get in the money, I like to take some off, in the money deeper, take a little off, and then I like to let the rest run in case it turns out to be like the long lost altcoin season, right? Okay. So here we have this, guys. Look at this. Same thing. Green up, inside bar. And look, here yesterday we closed above. Now we're starting to move up. Where or how high can ETH go? I would say your first major level is around this 1820 level. You can see low pivot right through here. That's going to be your first resistance. That's not your best case scenario. That's just first resistance. Your best case, and I mean best case, this trend line retrace, just like on Bitcoin, which would be around $22,125 currently.
Bitcoin's recent price action highlights how market structure, investor psychology, and key technical zones often work together to shape major turning points. While momentum has improved following a successful defense of important support areas, the path ahead remains dependent on whether buyers can overcome overhead barriers and sustain upward pressure. With critical levels now defining both risk and opportunity, the coming sessions may reveal whether this recovery develops into a broader advance or encounters resistance that reshapes the market's trajectory once again. Could Bitcoin's ability to hold key support and break through major resistance levels determine whether the next phase of the crypto cycle is just beginning? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.